Thank you again for joining Don Getling and Gino Franti on the National Real Estate Cafe. Hopefully you enjoyed your holiday thoroughly. I know that I had to wear bigger pants this morning, but I'll work on that this week.
No doubt. Okay, it's time about working on what's going on. We like to give you updates, what's going on in the economy, so you can kind of follow along and know what the difference is. The thing we always share with you is be careful of reports that come out. We try to share with you trends. So look at this first report and give you some idea of that.
Yeah, so what's interesting here, thanks for taking the time to draw the lines, Don, is we had another one, existing home sales, a little bit cool. But at the end of the day, you know, the media's going to jump on that and say it's horrible news. But it's not. So Don took the time of drawing the range for you. So all markets move in a range. And what's nice is that that new low is right at the top of the bottom range. So we're still doing okay, just right at the bottom. So two things can happen here. We could either make a recovery going into the winter and bounce back up towards the top of the range, or we could see that there's a trend reversal that's in sight.
That's right. All right, so let's look at another report here. Just give you an idea of what's going on. We've been telling you that the housing market has stayed pretty strong. So here's another report with home prices. Now, like I said, when you hear the media, they like to spin that the housing market's slowing down. I'm sorry, but 5.5% appreciation levels after that peak of 13.7%, not too shabby.
Not too shabby at all. In fact, right with expectations and right exactly what we were looking to get for the year. Remember that with home prices where they are, that's a lot of gain for all you homeowners. You're making a lot of money in equity right now. We're seeing it. We did a report just a couple of weeks ago. What is it, like once every couple of 38 seconds or something, somebody gets out of negative equity?
Yeah.
So appreciation is fantastic. We don't want 13%. That's too much. That's too hot a market. That would create a bubble. 5.5 is just right.
Nice steady climb. 5% on a $400,000 home, 20 grand, not too shabby.
Yep.
In 1 year, I don't think you're saving that. But anyways, here's another report to show you why the economy is chugging along pretty well.
Funny that we have the same situation here, right? So
Deja vu, huh?
Yeah, so consumer confidence is again down a little bit, but at the bottom of the range. And in fact, I know you took the time to draw this long range, but if you look at the short range, there's even a little short range building that's actually quite sideways, Don.
That's right. So we're going to watch consumer confidence, but consumer confidence is still remaining pretty strong, and that's helping the economy. It has a lot to do with the housing market because that creates a lot of jobs.
I was just going to say, I can't believe I'm going to say this, but the job market's really strong. Based on what we've been seeing with initial claims, there's almost no layoffs compared to the last few years. So that's going to continue to make wages go up, which cause a little bit of inflation, which cause rates to go up.
So let's talk about rates then.
Sounds good.
All right, so here's the latest rate chart. Now, you're going to see that we've been hitting a top level, meaning they improved a little bit from their lows, so still in the low fours, which is excellent, but the key thing here you notice is we're waiting to see, there's going to be another Fed meeting, plus a lot of political unrest, and the Fed meeting's on December 16th,
December 16th it is.
So we're going to see if they're going to raise short-term rates. So I think there's a lot of people on the sidelines waiting. What do you think?
Here's what's interesting, Don. So we had a relatively cool existing homes number, a relatively cool consumer confidence number, a Russian plane shot down by a foreign country. So with all of that happening, rates should be improving dramatically, and they're not. So that tells us that there's more likelihood that rates are going to get worse before they get better. So if you have the opportunity, take action now.
We always tell you, these rates are some of the lowest we've seen in history. So if you're thinking about buying your first home, buying your next home, refinancing, getting rid of mortgage insurance, now's the time and take action. Don't sit on the sidelines and waste this opportunity. You heard it right here in the National Real Estate Cafe with Don Getling and Gino Franti.
So if you want the best opportunities, get them every day by texting NREC to the number 58885 or check us out
at NREcafe.com.